Is it possible that one of the best investments is also one of the cheapest, easy to get access to, and actually help you outperform a lot of the professionals on Wall Street? Hi, I'm Jeff. I've been working in the financial markets for around 20 years now. And over that time, I've gained a lot of knowledge on all the different asset classes, stocks, ETFs, Forex options, you name it. And I'm at the point now where I want to share some of that knowledge with people like you. I've trained colleagues who are completely new to the markets and helped them get a really good understanding on world markets and how they move and what's going on. And it's never been more relevant with everything that's happening. Inflation, interest rates, the jargon, it's all so confusing. So if you want to learn a lot more about finance, the financial markets, or just have a general interest in it, subscribe to my channel and get a lot more videos like this. One thing that's worth mentioning though, this is not financial advice, okay? All I'm trying to do here is pass on a lot of the information and the knowledge I've gained over the years to help you achieve your goals and aspirations. This is not financial advice, so please don't take it as such. If you need financial advice, please find a financial advisor. The S&P 500. So what is the S&P 500? We see it quoted all the time on the news, online, wherever you go, anywhere around the finance, you'll see the S&P 500 and a number quoted in and around 5,200 where it is right now. And really all it is it's an index of the 500 largest companies in the US. Traded on New York, they're traded on the NASDAQ, and they're really just the biggest companies there that are listed on the stock exchanges, and they're sorted by the size of the companies. So at the top, you've got your likes of Apple, Microsoft, Amazon, all huge companies, and it's an index of those, and it's a great way to gauge what's happening in the stock market and overall what's happening in the economy. These companies, because they're so big, they tend to be very profitable as well, which is part of the reason why a lot of people think it's a great place to invest your money. It's a cross-section of the US economy. The S&P 500 is also used as a benchmark for professional investors, mutual fund managers of all different sorts, who have investors that are institutions. Well, the institutions want to look and how do they know if they're getting a good return or not? Well, they benchmark it against the S&P 500. If it was up 10% in a year, institutional investors and retail investors who put money with mutual funds, they want to know if their funds outperformed, i.e. it's got a return of maybe 11 or 12%, or underperformed. So the S&P 500 is also a benchmark, which is part of the reason why you see it quoted so much. So when you hear about S&P 500, you probably hear things like ETF, index fund. What are they? An ETF is really just an exchange traded fund. It is a fund, it's a pool of assets. But in this case, it trades on the exchange and you can buy it and sell it just like you would buy a normal stock. But rather than buy an individual stock like you might do in, say, Apple or Tesla or Nvidia, really with that one transaction, you're buying a certain percentage and exposure to the full 500. So it's a very cost-effective way to get exposure to 500 companies and the full spectrum of the largest companies in America. Historically, they've always been done as index funds. Now, they don't trade on an exchange, and most brokers will offer them to you, but you could also buy an index fund that tracks the S&P 500 or other indexes that you hear as well, things like the NASDAQ, the Dow, and others like FTSE in the UK, Stock 600 in Europe. So what are some of the other benefits of owning an index fund like the S&P 500? Well, diversification. Like I said earlier, you're not buying a single stock. You're not getting a portfolio of just 1, 2, or 5 or 10 companies. One transaction, you get exposure to the full 500 companies. And that is diversification. As somebody said one time, diversification is the only free lunch in finance, and it helps reduce the risk. Another benefit of owning an S&P 500 or any other index fund, particularly the S&P, is our low cost. You can pick them up extremely low cost, 0.05%, 0.1%, all depends on your provider. And costs can absolutely wreak havoc on your investment returns over the long term. The S&P 500 has returned historically around 10% per year. That's with dividends reinvested. So it's the change in the index plus the dividends added in will get you around 10% a year historically. No one knows for sure if that'll be the case over the next 10, 20, 30, 40 years, but that has been the case historically. Make sure you get your dividends reinvested so you fully capture that return. Another thing that's very important when you own index funds like the S&P 500, you want to buy through thick and thin, as Warren Buffett once said, especially through thin. What you don't want to do is times of panic, the markets are selling off like we saw a couple of years ago in the midst of COVID. We've seen it in the global financial crisis, the dot-com boom and bust that we saw. The worst thing that you can do, and that's going to really hurt your returns over the long term, is get nervous and sell up at times when markets are selling off. Warren Buffett had a famous saying, greedy when others are fearful and fearful when others are greedy. So at a time when the markets are selling off, you actually want to try and find more money and add that into an S&P 500 tracker to capture some of the gains when the market does eventually rebound. So that's really it. S&P 500, some would say the only investment you need. It's simple, it's cost effective, it's so easy to do. What you want to do, you want to get a brokerage account set up if you don't already have one. You want one that'll do automatic transfers or direct debit, will allow you to reinvest your dividends. Get it set up the automatic transfer so every month you're putting the most you can afford into that brokerage account. It will automatically invest it in, set those instructions with your broker, and every month you will be buying a little piece of the American economy, and you can capture some of the great returns that has returned over the last 40, 50, 60 years. Then what you want to do, add as much as you can. If the markets are selling off, don't worry about it. Buy more wherever possible and try and tune out a lot of the noise. There's always a lot of media and scare stories around the market selling off, a market crash. Don't worry about that. Just relax, disconnect, and if you can get more money to add it into the market, thinking long term, then do it, and then you won't have to worry about it. Trust me, in 10, 20, or 30 years, you'll be more than happy that you did it. If you like this video and you're interested to learn more about the markets in general, then please subscribe. I'm going to be producing more videos like this, but tell me what you want to know. I mean, whether it's options, Forex, futures, I've got experience with all of this stuff. Again, training new colleagues, helping clients understand how these asset classes can help them get to where they want to go and get the returns that they're looking for and ultimately their aspirations. And I'll see you again in the next one.